fragile users and players without mentioning challenges brought by blockchain technology. Banks will have to figure out their role as retail banks when introducing central bank digital currency, as lender with decentralized finance and peer-to-peer payment. I am hopeful that this webinar is going to answer few of these questions and many of the questions expected from around 900 people registered to this webinar today. We are hosting amazing speakers in these 2 days. I would like to thank them all for dedicating the time and sharing their experience and views with us. And I also would like to thank our sponsor, Oracle, Manage Engine, and OneSpan for their support. Before we get started, please be informed that this webinar is recorded. UBF is going to share the material after the consent of the panelists and presenter on their own website. Our team will be happy to answer all your questions. So if you have any, please type it in the chat box. And please note that moderators are gonna dedicate a few minutes at the end of each panel to answer your questions. So make sure that you do, please ask questions and don't miss to mention your full name and your organization you are working for. Without further delay, I would like to introduce Mr. Jamal Saleh, the Director General of UAE Banks Federation, who's honoring us with a welcome note before we start. Mr. Jamal.
Good morning, Waleed. Good morning, everybody. Dear friends, UBF colleagues, and attendants, welcome today to this UBF and Al-Iktissad Wal-Aamal 2-day event, Banks of the Future. I'm sure many of you know UBF. Just to highlight for anyone who is not aware of UBF, UAE Banks Federation is the unified voice and representative of the UAE member banks banking community. And part of what we do is that we offer such events for the members of our community and our technical committees. In total, we have 26 technical committees. They cover all lines of banking lines of business. One of those is the Digital Banking Committee, which brings you today's event. Salim, the chairman of the committee, will be telling you more about Digital Banking Committee. So please allow me to thank you all for being with us today. And thank you to Al-Iktissad Wal-Aamal for organizing this. Thank you for the Digital Committee, for your speakers and sponsors, and my UBF team for organizing this for you. I wish you a very successful and productive and informative two-day event. Again, welcome to UBF and good luck to all of you. Thank you.
Thank you, Mr. Jamal. A short, direct to the point speech. Now I'm gonna move to give the floor to Mr. Salim Ahmed. He's the chairman of Digital Banking Committee, and he's the man behind this show. Salim, the floor is yours.
Thank you, Waleed. Thank you, Mr. Jamal, for your kind words. As Mr. Jamal said, the UBF is the official industry association in the UAE banking sector. Specifically, our UBF Digital Committee, we work in collaboration with all UBF members in furthering the digital agenda across the UAE banking sector to address challenges such as eliminating friction in customer digital onboarding, including eKYC. How can we face the challenges of the new age, new banks, and tackle issues such as open banking? How do we raise awareness and knowledge across the banking ecosystem on digital technologies and global best practices? The banking ecosystem in the UAE is quite robust. It consists of both local and international banks. The UAE government is very keen to further the digital agenda, and its e-governance is among the world's finest. The UAE is also home to a flourishing ecosystem for startups to aid and assist fintechs. The UAE is ranked 14th globally on the IMD World Digital Competitiveness Ranking of 2020 and is the first rank in this part of the world. The pandemic has only accelerated the adoption of digital technology, and investments in digital are a key priority amongst the banks across the world. The theme of the summit, as Waleed said, is Banks of the Future. And digital is closely intertwined with this theme in many ways. Will the Bank of the Future leverage digital technologies just to improve its current business model, or to create net new products, services, and models and achieve a true digital business transformation? During the summit, we'll be addressing such issues, and we'll be discussing spread across 4 panel discussions, topics such as how can banks go about digitally transforming themselves? What are the key success criteria, and what pitfalls to avoid? What is an ideal customer digital journey, and how do you go about achieving that? How to overcome compliance challenges during digital onboarding, AML, ATF? And what's in store for the future? Will the Bank of the Future be the grocery store next door? We'll hear a great lineup of speakers lined up for you. Today we have a presentation by Mr. Chris Skinner, whom I will shortly introduce, who will be talking about fintechs versus traditional banks. Are they friends or foes? Tomorrow we have another exciting presentation by Mr. Ronit Ghosh on the future of money. I welcome you all on behalf of the UBF and the UBF Digital Committee, and wishing you a great experience listening to the wonderful speakers we have lined up for this summit. We'd like to thank Jamal and UBF for their support and the opportunity to conduct this event, and also to our sponsors, Oracle, OneSpan, and Manage Engine. It really pleases us to see so many participants, including from outside the UAE. And let's kickstart the proceedings, ladies and gentlemen, with our first headline speaker, Mr. Chris Skinner. So, Mr. Chris Skinner, I'll introduce Mr. Chris Skinner. He's not a stranger to many of the banking industry. Is a world-renowned and one of the most influential and authoritative personalities in the banking and fintech space. He is the CEO of the Financial Limited, a research and media firm focused upon fintech and the future of finance. He has been voted one of the most influential people in banking, in financial technology, and in banking information security. He has been an advisor to the White House, the World Bank, and the World Economic Forum. He has recently been voted Game Changer of the Year and Financial Markets Advisor of the Year by Finance Monthly, CEO of the Year by CV Magazine, FinTech Speaker of the Year by TMT Global, and is the author of 16 best-selling books, and the latest of which is Doing Digital. It is our pleasure to welcome Chris to present his views on fintechs versus traditional banks. Are they friends or foes? Over to you, Chris.
Thank you so much, Mr. Ahmed, and welcome everybody, and good morning. Or good evening, good afternoon, because you never know where you're sitting these days. I'm going to talk for 15 minutes about the nature of digital impacts on banking. And I thought I'd structure it by first of all talking about what is digital, the rise of fintech, the new digital business model, the challenge of transformation for the traditional banks, and the next 10 years. To begin with, I think we need to talk a little bit around what really is digital. Because it's bandied around as a term, and I'm not sure many people really understand it, particularly within traditional organizations that I meet who talk about it as a channel. It's not. They delegate it to a chief digital officer, which is a mistake. They treat it as a project, which will fail, and they allocate a budget to a function, which will be wasted. Because digital is a complete revolution of the business model of banking and finance. And it's completely separate from the industrial era model of banking and finance. The industrial model was all based upon physicality with buildings for distribution, staffed by humans. The digital model is all about having connectivity through servers on the network to distribute data and analyze data. It's a very, very different business. And the challenge, therefore, is how to turn the company on its head to deal with the new structures of digital distribution and to eradicate the old ways of physical distribution. In many ways, this is something that could be put on the back burner for the last half a century as technology and automation took over a lot of functions in all industries. But the reason why it's come to the fore is twofold right now. One is the impact of the fintech community on financial services, and the second is the global pandemic. Fintech companies have risen very quickly to become some of the most valued companies in the world. When we talk about Stripe or Klarna or Adyen or Square or PayPal, you know, these companies are now worth more than Bank of America and Goldman Sachs and others as individual organizations, because they are radically changing very quickly the nature of finance through laser sharp focus. And there are over 12,000 fintech companies around the world, many in the MENA region that I know intimately, who are doing interesting things which are based around the open banking business model, which is nothing like the closed banking business model. In the industrial era, everything was closed. The value chain, the customer relationship, the end-to-end supply chain was all controlled by one institution in their own internal structure. Now, 12,000 or more institutions in an open ecosystem are rebuilding financial services. That's been a big driver of change. But secondly, the pandemic has been a big impact on driving digital transformation, because I don't know how it's been for you guys, but for me, I've been pretty much staying indoors for a year and a half, and therefore I order everything online. And because of that, we've seen a huge rise in companies that are wholly digital and a huge demise of companies that are wholly physical. The hospitality industry, airlines, anything that demands that you meet face-to-face physically has gone through a complete downturn, whilst all the companies that are digital have gone through a complete upturn. Now, what that really means is that you have to transform to be truly digital. And I've been very disappointed by the reaction of most traditional financial firms to the pandemic in particular, because they've had years to think about digital transformation and the digital revolution that I've talked about for too long. And now they suddenly had to embrace it in March 2020. And what most did is they embraced it by signing cloud contracts to become cloud-based, to allow employees to work from home, to allow customers to be serviced at home. That is not digital. I was very struck by a poster that was the backdrop to a meeting within Alibaba in China. When Jack Ma walked on stage, the backdrop said, "We are a company that's made on the internet." And that to me is what truly digital means, a company that's made on the internet, made for the digital network, born in the digital age. When I try and put that in context, I normally historically have talked about, you know, the idea that you have to deal with someone you never see, and that doesn't really hit the mark. We now know you have to deal with people you never see because we haven't seen each other face to face physically for a year and a half. So we think we've transformed to be digital, but signing a cloud contract to become cloud-based is not digital. That's just actually signing a contract to be cloud-based. It's not redesigning the business model to be born on the internet, made in the digital age. And for me, the business model of born on the internet, made for the digital age, is imagine if all of your customers lived on Mars and all of your business was based on Earth. What would the business model of that be? Because for the last year and a half, you might as well have had all of your customers living on Mars. They've been at home, and all of your people living on Earth. They've been at home. That's what we need to build as a business model. So the business model of the digital bank in the digital age is actually one that's an orchestrator, a conductor of an ecosystem of open services from thousands of companies that are orchestrated and conducted to deliver the best customer experience for your target audience. What does that really mean in practice? Well, it means you have to focus on what is your core customer audience? What are your core competencies? What are you trying to orchestrate? How are you going to do it? Bearing in mind you'd have no control of the supply chain, the value chain, the customer anymore. What does that mean for how you operate? And that's been a huge issue for most traditional banks because they've never had to deal with such a transformation before, and they've never thought they would have to. Bill Gates in the 1990s said, we need banking, but we don't need banks. I completely disagree with that view. We will always have banks, just that we'll now have digital banks, and they're different. And the organizations that are trying to do digital as a project with a function, with a chief digital officer, will be acquired by the organizations that are actually transforming their banks to be truly digital, born on the internet and native to the network. What does that bank look like? Well, it looks like a bank that basically has the front end all based towards connectivity of devices, not connectivity of customers. It's connectivity of devices to deliver best customer experiences, absolutely. But today, most of the traditional firms that I meet in finance talk about apps and mobile. That is not the open banking model of finance that we're going to see developing over the next 10 years. The open banking model of finance of the next 10 years is based around the Internet of Things and making sure that anything in my ecosystem that I'm using, whether it be my car, my home, my television, my office, my laptop, my mobile, or my glasses, or my key rings, can connect and transact. So it's the Internet of Things connected through apps to deliver the best customer experience is the new front office. And that's both for corporates and consumers. It's not just talking about retail here. The middle office is a whole platform of connected APIs, plug and play software from thousands of different institutions that can deliver specific microprocessing at the best level to give the customer the best experience for your audience. I keep coming back to it, it's your audience you need to focus upon, not anyone else's. So if there's 12,000 companies that are doing one thing really well, like merchant checkout online or trading and investing using a mobile service or whatever it may be, you need to bring those together and select from those 12,000 firms the right ones for your audience. It won't be 12,000, it might be 12, 20, whatever the number is. It's building the partnerships, being open to collaboration, treating partners as equal, and integrating them into your ecosystem for your audience of customers. And no longer trying to control the supply and the value chain and do everything internally, which is the physical aged industrial business model. It's building the new digital integrated partner ecosystem model. And we, again, throw these terms around a lot, but I'm meeting more and more heads of partners and heads of ecosystems in banks these days than ever before. And to a large extent, these are things that can't be delegated. They're things that need to be integrated into the business structure. And finally, the back office is all about data and data analytics, and data is the air that we breathe. I could spend a long time talking about these things. I've only got a short time this morning, so I'm going to move along because I have met quite a lot of banks that are trying to do these things, and their biggest challenge is working out how to do it. And what they've been doing is going to the digital organizations that they respect, like Amazons and Alibabas and Pingans and Spotify's, and learning how they organize and how they do things, and then trying to internalize that to their own operations and organization. And they've been doing that quite well. But it's very slow. Typically a digital transformation project takes 5 to 10 years. I don't think we have 5 to 10 years anymore to do digital transformation projects. And those traditional firms just starting today will probably find that they might not be around in 5 years because they're acquired by the institutions that started 5 years ago. If you want to know more about how to do this, then my latest book that was mentioned, Doing Digital, goes into great detail. But I guess the number one thing that came out of that for me is the survival of the species, from the Charles Darwin quote, which is, it's not the fittest, the fastest, or the most knowledgeable, or the strongest to survive. It's the ones that are most adaptable to change. But adaptable to change in what way? If you're changing in the wrong way, treating digital as a project, a function with a budget, that's changing in the wrong way. You have to make it something that's in the heart of the organization, that's born for the network and born for the digital age. That's transformation. That's what it means. It's changing the mindset of the management, the leadership, but everyone in the organization to be truly digital, not just saying it's a project, a function, something that we're trying to do as a channel. And I'll leave you with a final thought, which is the future, because that's what this is all about. And for me, something that's been becoming a very strong message is where we're going next is not just about digital and transformation and changing the business model, but actually changing the whole nature of what we view as return on investment and return on equity. The traditional view of financial services is quarterly results to make profit for shareholders. But a lot of banks, JP Morgan being the biggest, are now saying that's no longer what drives the business. It's stakeholder capitalism, not shareholder capitalism. And this was drilled home to me when I was in Alibaba in Hangzhou, China. And there's a poster on the wall in one of the offices that we have to do good for society and good for the planet, not just good for the shareholder. And that, I think, will become another big driving factor over the next decade, because activists and activist investors are changing the ethics of banking and financial services. HSBC have been forced to, for example, commit to getting rid of any fossil fuel investment by 2040 in Europe and 2050 worldwide, because their investors are telling them they have to do that, not just the balmy army of environmentalists. And the transparency that digital brings to the business is part of this, in that if you try and hide anything because you're doing something that might be viewed in a poor way, that will come to light because of the network. Digital transparency will drive stakeholder capitalism, will drive more moral ethics within finance and business and commerce and government worldwide. So these are all interrelated, but I've got a limited amount of time. I hope I've covered the points you wanted to hear. And my message I'll leave you with is, if you really believe that what we're going through is an evolution of your business, then your business won't be around in 10 years' time. It's a revolution of our business. You have to embrace an open model of an ecosystem of financial services providers that you orchestrate and conduct to deliver the best experience for your audience and your customer. Thank you.
Moving to our first panel discussion, the new paradigm of digital transformation in financial services. Allow me to introduce Mr. Giorgio Andreoli, who will be moderating this panel. Giorgio is a senior executive with over 25 years of experience in high-tech multinational corporations such as Accenture and Ericsson. He is currently working on his own venture as an angel and strategic fintech investor. Mr. Andreoli, over to you.
Hello, everybody. Thanks, Ola. Can you see and hear me? Is it okay?
Yes, everything perfect. Everything perfect.
Okay. Thank you very much. You never know with those Zoom and also all the other virtual instruments. So thank you, everybody. Thank you very much, Ola. And thanks to all the people which is right now attending this virtual event. Actually, we have a very qualified team of experts and executives today with us. I'm quite excited for this panel discussion. For this first panel session of today, we have the following people. Each one of them have a long experience in some prominent example of Bank of the Future around the globe. I'm not sure if every of them joined yet, but I will introduce anyway the people. We are supposed to have a Mr. Ramana Kumar, which is the Chief Executive Officer at Magnati, which is the payment subsidiary of First Abu Dhabi Bank. He had a number of previous executive positions, was a group head of payments and digital banking, still at First Abu Dhabi Bank, and head of global transaction banking at the same bank. Then I see in the panel Mr. Runit Ghosh. I hope the pronunciation is correct. Runit, thank you for joining. Runit is a global sector head of banks research and co-head at the FinTech group and head of MENA research for Citibank, based in the Emirates. He is also the lead author of Citi GPS Bank of the Future and FinTech report, which is, I understand, a bestseller of the sector, one of the bestsellers of the sector in terms of reports. And he is also advisory board member at the Center of Finance Technology and Entrepreneurship at Citi. Then next we have Mr. Jamie Broadbent. Jamie is head of digital and innovation at RBS International, based in the UK. Hi, Jamie, and thank you for being with us today. Jamie is a business owner of all customer-facing digital channels at RBS, and is also in charge of RBS digital innovation strategy. Jamie was also named the Young Banker of the Year in 2014 by the Chartered Bank Institute for Innovation, specifically in the area of SME finance. Then next we have Mr. João Dias from Portugal. He's the Chief Digital Officer at the Novo Banco in Portugal. And in this position, he's directly involved in all digital transformation projects at the bank. He is also non-executive board member at Best Bank in Portugal, which is the digital first subsidiary of Novo Banco. He previously was a partner of McKinsey in Germany. And finally, last but not least, we have Mr. Matthias Kistler. Matthias is a business expert, API banking responsible at Commerzbank in Germany. He's in charge for several projects in the area of API monetization and open banking API, and was previously responsible for digitalization and the scaled agile within the strategy department of Commerzbank. So thanks to all the panelists for being with me today. I hope we are going to have a very lively and interesting conversation for all the people attending the event. So let's start. Let's start with Runit. Runit, considering your role, your global and local visibility, and following up also the great introduction we had from Chris, I would like you to warm up the discussion. Specifically, from your perspective and visibility, which are the top digital banking trends globally, and which are going to impact more the banks in the Middle East region in the short mid-term?
Sure. Thank you for that question, Giorgio, and the introduction. Maybe it's worth putting into context digital banking and fintech before we dig into individual products and trends. The way I think about it is consumer fintech, and particularly B2C digital banking and fintech, has grown in the last 10, 15 years in China, in East Asia, in the West, in the white spaces and the gaps that the incumbent banking industry has left behind. The incumbent banking industry that all of us either grew up with or work with or both really, I date the modern consumer banking industry, the 20th century banking industry, to that kind of post-war period as the American middle class grew. So kind of late 1940s, coming out of the war, through the 1950s and 60s. In that period of about 20, 25 years, many of the form factors for global consumer banking were set. Credit cards, ATMs, debit cards, that all happened in that period. Then you get this very big disruption, really in the 1990s and the 2000s, the consumer internet and the mobile phone. And here, sitting in Dubai, in the rest of the Middle East, in Asia, in Africa, India, what happens is that the mobile phone and the consumer internet represent a massive disruption. Same in Western Europe and the US, but particularly in what used to be called emerging markets, probably no longer the case. And one thing that changes is speed and network effects, and then everything else follows. Just to give you some numbers, when the credit card first came on the scene, it took about almost, the exact number is 28 years based on our data, but let's say 30 years to reach 50 million clients. 30 years. ATM took just under 20 years to reach 50 million clients from the first ATM to late 1960s. And not surprisingly, the television, it was about the same. So most of us on the panel, at least I did, and maybe you, Giorgio, some of the others may be younger, but I grew up in an era, I still remember black and white TV. Giorgio, you don't have to confess if you remember, but in India as a child, I remember black and white TV, okay? It took 20 odd years for the TV to get to 50 million users. So it's very similar, credit cards, ATM, TV. And in a way, consumer banking is from the black and white TV or the early color TV when you have one state broadcaster or two state broadcast. We're in a streaming age, we're in a mobile first age. 50 million consumers, I mean, Twitter reached it in 2 years. I don't know how long TikTok took, probably less than that. We're in a speed era, which that's the biggest change, speed and network effects, and they're combined. So the biggest challenge banks have today is you're facing a world where, you know, the core of banking, when it comes to particular consumer banking, I didn't wake up this morning saying, I want to do banking. No one did. We woke up this morning saying, I need to go somewhere and I have to pay for my Uber or my Careem. I want to buy the house I live in that I rent. I need a mortgage. I need to save for my retirement or my children's education or whatever. I need savings. So banking and financial services is embedded in other activities. And one of the biggest trends right now is embedded finance. And that plays into platformification and Chris's previous comments around the Internet of Things. So I think that for me is the most exciting, this kind of most exciting area. And then individual products come out of that. I'll stop here and maybe hand back to you, Giorgio.
I prefer not to talk about my age for some reasons, but yeah, in the digital age we are all young actually. Thank you very much, Rohit, for this perspective. Now, Jamie, let's see in practice what happened in the markets. Now, referring to what Rohit just said. Let's see the real experiences, because we all know that the UK, you know, when it is about financial services, is basically the global pioneer and the global testbed for innovation. So we are very pleased to have you today here. Based on RBS UK experience, how the competitive landscape is going to change for incumbent banks undertaking a digital journey? Especially taking into consideration the new banks, the fintech, and also the big tech player. Please.
Thanks, Giorgio. Great question, and great to be here. And I'm delighted to report that I'm young enough not to know what a black and white television is. So that's a good start. You know, per the introduction that we got from Chris this morning, you know, clearly the landscape has already changed. You know, for the longest time in the UK, for example, you know, consumers had the choice broadly between 4 or 5 big banks, whereas today, literally, there are hundreds of digital banks and bank-like alternatives that customers can choose from. Now, that's been a really good thing for increased consumer choice, It's motivated incumbent banks to become more innovative, more competitive, and raise their game in relation to customer experience. We've seen an explosion over the past 5 to 10 years in the creation of new fintech organizations. Initially, I would say perceived to be a threat to banks, but have actually been a huge enabler. And the reason for that is that banks have what most fintechs want, and that's access to large volumes of customers. The banking group that I represent has 19 million personal and business banking customers. We are a known, trusted brand. We've got banking licenses, the ability to gather deposits, to lend money, experience of navigating complex regulation. And so for a fintech, that's a desirable asset. What fintechs offer is they offer speed, they offer innovation, they offer new technologies, new ways of working. And so for the most part, banks and fintechs have established really good and strong partnerships. And I don't necessarily see that changing. To your question, I think the interesting dynamic will be big technology, because they have even more customers than the banks do. They have better brand awareness than the banks do. They've got bigger tech budgets. And their entry into financial services is inevitable, right? It's not a question of if, it's a when and it's a how. And so I guess really the key question is, well, how do banks respond to that? And the answer isn't to try and become the next Google or the next Facebook or the next Amazon. Instead, it's about focusing on being an enabler in the way that fintechs have been for banks. I think the best example of that we've seen so far has been probably the Apple Card, right? Apple focused on providing that great digital front-end experience. Goldman Sachs, as the bank, provide the underlying credit facility. And I think increasingly what you'll see is the role of banks being facilitators to big tech, and leverage that opportunity of becoming facilitators. The banks that do that and do that to their advantage will be around for the long term. Some banks won't respond to that and will inevitably drop out of the marketplace.
Good. Thank you. Thanks for the great examples. Okay, so let's go next at this point. Now, you touched on some relevant points and definitely some great examples of companies providing really fantastic customer experience, like Apple, and this is exactly now becoming also the benchmark in the banking environment. Now, it is what at Accenture we used to call liquid expectations, and also the way that big tech companies transfer expectations into other industries which are different from a digital one, and banking is one of them. With this respect, I would like to ask to Joao this kind of question. What is the design of an effective customer journey about? What make it a distinctive customer experience, Joao? And how basically an incumbent bank can design such a customer experience as an element of strategic importance within in the frame of an omni-channel strategy? What is the experience at Novo Banco, Joao?
Yeah. Well, thank you so much, Giorgio. First of all, let me start by saying that every time I hear Chris Skinner and his demise of Chief Digital Officers, I start by being slightly embarrassed about my title, but I can't help agreeing with him. And I also see success in my role as kind of making sure that we don't need a Chief Digital Officer at Novo Banco anymore. But to your point, I think, look, excellent customer experience is definitely a big priority for Novo Banco, particularly as we think about ourselves as a omni-channel bank, right? So yes, our customers love to interact with us through digital channels, but they also love to interact with us through branches and other channels. And so developing a really omni-channel experience for our customers is a real priority. Let me highlight three aspects of that. I think the first aspect is it starts with bringing in great customer experience design practices. A lot of the banks, particularly incumbent banks, didn't have that. And so we had to bring in a team of designers that are really, really good at listening to customers. We've interviewed hundreds and hundreds of customers on a very regular basis. We do constantly doing tens or hundreds of A/B tests to see what works better in terms of customer experiences. So there's a science to this that needs to be brought into an incumbent bank like ours, and that is really important, and that changes, the way we think about designing some things. For example, we just launched a fantastic strong customer authentication through push notifications instead of SMS, and so it makes it a lot easier for customers to do a transaction. And when we were designing that, we thought, oh, we need to optimize this for speed. This needs to be really, fast, so that customers feel it's really painless, right? And then when we were testing that, we realized that customers were really afraid, right? I mean, what happened? Oh, did I just do that payment? I was, waiting for something to happen, right? So we actually had to introduce like a 3-second delay into that particular experience so that customers felt safe about using that strong customer authentication method. This is just one of the examples of the many things we learn about customers. I mean, so that's the first thing, right? Is having real science in terms of customer experience design. The second one is developing an omni-channel framework and technology that allows us to, kind of build once and deploy across many form factors, many channels, be it self-service, be it assisted. That is, again, something that most incumbent banks didn't have. We had to build both the UX UI frameworks and the kind of front-end technology to allow for that. And now we're able to, for example, launch a new kind of buying a third-party fund online, and we built it once and it was immediately deployed across app, desktop, private clients, corporate clients, assisted, non-assisted, everything, right? And so that is the kind of efficiency also and time to market that we need to achieve. And then thirdly is about, really pursuing proactively an omni-channel strategy. It doesn't, customers drive themselves to digital, but there's still some friction there, right? So we need to help customers go there. We need to put the branch network at work. We need to design the right incentives. We need to make great value propositions for customers to come into the digital channel. So it's really a broad agenda that we have for customer experience.
Great. Thank you, João. Very important topics indeed, and very competitive area, I would say, between incumbent banks and fintech and big tech. Probably one of the grounds where we will the battle between for dominance between those players will be played, for dominance or for cooperation between them. I'm not sure if we have Mr. Ramanakumar, because I think I saw him at a certain point, but maybe he's not among the panelists, so maybe we can skip for the time being. So I will pass to Matthias Kistler from Commerzbank. João mentioned all the important technology, which is basically behind the digital disruption for banks in those days. Now, Matthias, I would like you to talk about this specifically, and to mention which are the key ingredients of this revolution from a technology standpoint. We know that one of them, and probably one of the most important of those ingredients, is API. And we know you are an expert in this area. We would like especially you to talk about the role of API in digital revolution for banks, and what is namely the real world experience of Commerzbank here.
Yeah. Thanks for the question, Giorgio, and thanks, of course, for the invite, for having me here in this very interesting webinar. So, yeah, I think some of the speakers already said that the behavior of customers is changing. So I think it's true to say that banks cannot rely anymore on the traditional business model with customers coming into physical branches, depositing their money, and the banks take the money and make some profit with it, and that's it. So the customer behavior is changing, and their expectations towards banks are changing, and that's true for both private and business clients. And that means that we as a bank, of course, also have to change in order to keep up with that market trends and to fulfill the expectations that our customers have. And of course, in this digital transformation, the key driver is technology, and one very important technology which plays a significant role for us is APIs. So there's always two perspectives with APIs. One is internally and one is externally. Internally, they help us getting a more efficient IT. So when you think again of what Ronit said earlier today, that speed is very important. If you have standardized and reusable interfaces between your applications and your databases, then that of course lowers the time to market when you develop new IT features and products. So that's one thing where APIs help us a lot. And of course, they lower your development costs, also a very important point. And externally, of course, because they are very easy to use, they also help us getting in contact with our partners. When it comes to external APIs, I think it is fair to say that it's not too long ago that banks didn't really want to open up their data to external partners or whoever, but I think there is a mind shift. So this has changed. And of course, the Payment Service Directive 2 has been a catalyst for that development, but lots of banks, and that of course is also true for Commerzbank, won't now even go beyond the scope of Payment Service Directive 2. So yeah, what's our way of doing that? We have to find a three-step strategy for that. So at first, we want to create internally the API infrastructure, and of course, release internal APIs in order to get all the advantages that come along with them. That was our focus for the last years. Now that's shifting for Commerzbank. So a second step is to open up more externally, to provide more and more external APIs, to have more and more external partners and clients who consume these APIs. And to give you some numbers here, we have today over 460 API operations live. We have up to 140 million API calls every month, most of them still internally, but of course, this relation is going to change in the future. And if we continue to move on that path, yes, there is still a third step, our vision, and I think Chris earlier today spoke about that too, that ecosystems will become very important for us. So providing ecosystems or to take part in other ecosystems in a role as orchestrator or provider, that's where we want to go to. Yes, and external APIs, we can use them as tool for direct monetization. That's one very important. We want to benefit from them by bringing our products through APIs to other platforms. That works the other way around as well. We want to incorporate services from other providers into our product catalog to increase our customer satisfaction or to get a commission for that. And of course, we want to provide very efficient banking channels for our existing clients. And a very strong message, of course, is that we witnessed cases that companies are looking for banks in Germany, and they pick us because of the APIs that we have. So that's where they look first, and then they look for accounts and credits and so on. So that shows that APIs play both internally and externally a very important role for us.
Okay, thank you, Matthias, also for giving us some details about the Commerzbank implementation and how things are going. I see that Mr. Ramana Kumar joined us in spite of some technical difficulties. Thanks for being with us, Ramana. I would like you to...
My pleasure, Giorgio. Apologies. It's just, super busy. And then ultimately, as usual, technology gives you challenges whenever you need it. Murphy's Law.
Technology is always challenging, we know. I would like you, given your strong background, Mr. Kumar, I would like you to ask one specific topic which is a key in the digital age, definitely for banks, which is payments and paytech. You know, this is one of the fastest growing areas we know very well within the financial services industry. May you please outline which are the key trends globally and the ones which are most relevant for Magnati and for the First Abu Dhabi Bank for your clients, please? Thank you.
Thank you. First of all, good morning, everyone. And as I said, apologies, I joined late. And it's my pleasure to be here with all my panelists, and and thanks for taking your time. Payments and paytech are going through massive disruption, as we all know, and that's the reason why, as Fab, we also created Magnati to be agile and nimble and to be fast in the ever-changing payments industry to invest in the right tech. Now, if you look at traditionally what used to happen, payments used to be a very transactional business where you would finish a transaction and then you give a POS machine or you give an e-commerce gateway, and that's where it ends. And also from a corporate perspective or merchant perspective, they think it's a cost where they pay a cost per transaction. What payments have done is they've now moved completely away from a transactional model into what we call a value-added model. So there are four key possibilities payments have opened up. The possibilities of new revenue opportunities through using data and using data monetization. The possibilities of opening up innovation through using right platforms. Matthias talked about APIs, and that's one of the great storylines we are building on payments platform, wherein it's all about single API integration, and through that single API, you can connect to any fintech or our own technology. So it's like, you go to App Store, you find Apple solution as well as competing solution, but there is only one platform. You just go and integrate to platform once. The third possibility is around the possibility of killing the black box. I used to send money and it used to take 3 days. I don't know where the money is. Or when I do a transaction, the settlement happens after, or the reporting happens after 24, 48 hours. Why should the money be stuck in transit or the black box? And the fourth possibility is about seamless customer interaction. For those who still go to malls or supermarkets, the amount of time you spend in the supermarket is equal or actually less than the amount of time you spend to check out, because you stand in line and you stand in queues. And there is a bit of seamless customer experience and making the payments invisible and seamless. So payments have started taking over that shape. And in terms of payments tech and some of the innovatives that are happening in terms of Magnati, what we're doing is we have created our own proprietary API payment API layer gateway. As part of this API gateway, we go to the clients and merchants and we tell them, you integrate to this API gateway. We not only have on our platform our solutions, but a lot of fintechs who are part of our platform. So you can select whichever fintech you want to select. Matthias talked about how customers are selecting the API first and then the bank next. It's absolutely true. But for the same fintechs, we give a platform where they can come in and open up to all of our merchants in a seamless way. So it's a win-win for all of us. And what we're telling the merchants and corporates is, you integrate once. You don't need to spend hundreds of thousands or millions every time a new form factor comes into the market, or every time you want to deal with the new fintech. They just come onto the platform with the same API you've connected with us. You can connect to any of the fintechs that become part of the platform. The power of being a payment solution provider is now moving away from becoming a cost to the merchant to reducing cost to income or generating new income. That's a summary of all of where all of us in this paytech field are looking at, and that's the ultimate value.
Okay, perfect, Mr. Kumar. Thank you very much. Very interesting topic, very hot topic. We will be back on this later during the panel discussion. At this point, Runit, I would like to be back to you now, and let's talk about another key topic which has been already touched in a number of speech today, a key topic for the bank of the future, and this is strictly related to APIs, to payment, to fintech. And this is open banking. Okay, open banking has been one of the most talked about topic in the last 5 years, maybe one of the most hyped to some extent. And we know now that open banking is actually evolving, into open finance and open data. This is a very, very broad topic. I know that you could probably talk for 1 hour at least about all this stuff, but I would like you to please outline in 4 minutes what this means for banks and which are the key challenges and the key opportunities. Thank you.
Sure. Thank you, Giorgio. Maybe I could pick up and continue the thread from my previous analogy, going from the TV model, the single broadcaster, state broadcasters, streaming, because that's the world we're in. We're in this world of mobile only or mobile first, and we're in a streaming world when it comes to media, content, information, but just our lives. And so what open banking allows us to do as bankers, consumers, regulators, is harness that, because we're getting all of this potential information, multiple channels, multiple providers, and we have to rebundle it. We have to have clients, we don't want thousands of finance apps on our phone or our computer. And so in a way, open banking creates the regulatory framework and the technological framework to allow us to have this diversity, so this kind of multicolor streaming world rather than the single state broadcaster. Now, when you look at open banking, there have been 2 approaches. One is a regulatory-driven approach, which is what's happened in Europe, including the UK, and maybe a more bottom-up market-driven approach has happened in the US. And in the US, given the diversity of the financial system, there are actually probably more success stories around open finance or the open API economy, because this is, in a bigger way, it's about the API economy. In Europe, which has been regulatory driven, and this is a warning for our region here in the UAE and the Middle East more broadly, is if you have regulators pushing this more than business people and consumers, importantly, you're going to get a compliance driven solution. So I remember back 3, 4, 5 years ago, everyone, people like us, were talking about it, just like we're now doing in the Middle East. We were talking about this back in the UK and in Europe, consultants in particular. And frankly, for many years, and nothing happened. It was just panel after panel after webinar. And there's a real risk we're going to do this now again in the Middle East. I think the US experience, maybe the Brazilian experience, is probably better to look at, because real use cases, for consumer-driven use cases, have happened. So that would be my major warning: is let's all talk about it, but let's not get, there's this real risk of we're just going to talk the talk and not walk the walk. In order to walk the walk, you have to have regulators, but also banks. So obviously I work for a big bank. My dear friend Ramana works for a very big bank in the region. I know he's a payment and fintech guy now, but these banks have to embrace it as good for their consumers. And there have to be fintechs or partners that are giving relevant solutions. So I just fear that we're in a bit of a hype bubble here, but I'm at risk of maybe going too negative. So I'm going to shut up and let others jump in.
Okay, thanks a lot, Runit. Let's jump to the next question. As you said, Joao, basically, I do believe that for leading banks, that a driven strategy may be the key to become a genuinely customer-centric bank. No. What does customer centricity means today for incumbent banks, and what can be the role of digital technologies like big data analytics, machine learning, AI, and so on, in order to enable and build a truly customer-centric bank?
Yeah, thank you. Customer-centric or customer centricity builds on that customer experience design that I started talking about, and so it starts there, but it's much broader than that, right? And data and analytics plays a big role. Let me talk about 3 aspects of how we think about customer centricity. The first one is we need to understand that we deal with many different types of customers. I mean, that's obvious, but we end up creating solutions that are very rigid and that only serve one type of customer as well. Actually, so what we're trying to do now is creating solutions that are plastic in a way that can be shaped around the specific customer needs, so that we can go broader, right? And so, for example, we know we have 400,000. We're a relatively small bank. I mean, Portugal is a small country. We have 400,000 active mobile users, but we know we could have at least 200,000 more if the service that we provided would be a little bit more adapted to them. And these are typically older customers that tend to have low digital skills, or even sometimes very young customers that tend to prefer very simple kind of no confusion type of interaction. And so when we've developed our last version of our mobile app, we've made it in a way that it can be shaped around different customer types, right? So the visualization, for example, using more text or more graphics, the language that it uses, the navigation, all of that can be shaped according to the customer needs, right? And we're in the process of actually making that also AI driven and shape it for the customer in advance of the customer. I mean, the second one, and talking about AI, is investing significantly in artificial intelligence for personalization, right? So we've created a team of data scientists to work mostly on personalizing not only what we offer to customers, that is normal already for a long time, but also every single experience gets to be personalized. So, for example, again, when I open my mobile app, I will see a set of choices for what I do with it that is different from what my wife sees or what my colleague sees, because we are different customers. We do things differently in our day-to-day banking, and so in the morning when I wake up and I'm sitting on my sofa and I open my app, what it tells me that I should be doing is different from what my wife sees or what I see in the evening when I'm coming from work. And so it shapes around the specific customer needs, because we know what customers tend to do, and AI plays a big role there. And then the third aspect is going well beyond finance and understanding that we can help customers in a much broader way, right? And so, yes, we start with the financial needs, but then we broaden that. And here, of course, orchestrating ecosystems of partnerships, being open to integrating multiple aspects is really important. So, for example, with our SME segment, we not only give them great financial management tools so that they can manage their own finances, but we also integrate that with the accounting software so that we can then help them with their administrative burden and diminish the administrative burden, make it easy for them, right? So we're solving a problem that we are, very well positioned to solve, but it's not an immediate finance problem, and that's a lot of the focus that we have right now.
Thank you, João. I kindly ask to all the panelists now to be very short to the point, because we are, how to say, going to spend too much time. I would like to leave some space for the questions from the audience. So, Matthias, one of the areas where Commerzbank has been very strong in the past years is corporate banking. Let's now switch a little bit to the topic of discussion. Can you tell us something about how Commerzbank implemented corporate banking, how it is evolving due to digital technologies, and also in this case, which are the key trends and the technology components for corporate banking?
Yes, of course. Thanks for the question. So, as I've said, the expectations of our clients are changing, their behavior is changing. That, of course, is also true for corporate clients. So they don't want to use a fax machine to communicate with us. they have even to digitalize their business as well. So that we need to provide efficient banking processes that they have the time to focus on their transformation and not on banking communication. And if they transform the business, of course, their needs are going to change. And again, we need to provide up-to-date banking solutions that fit to these needs. And of course, not only APIs help us doing that, but also other technologies. Of course, we all know the trends like cloud, big data, AI, blockchain, and so on, help us, of course, to adapt to these new expectations. And I can give you 2 examples how this looks like for Commerzbank. So as you might know, Germany has a large sector of small and medium-sized companies, and lots of them are industrial companies. So if these clients buy a very big machine, that can be very capital intensive for them. And sometimes they have high liquidity risk. So if they buy a big machine, but business is not going well and they have high repayments to do, they can have liquidity troubles. So Commerzbank offers a tech-based innovative solution for that with a pay-per-use credit. So this form of loan makes it possible for our clients to link the repayment to the usage of the machine they just bought. So if business is going well and maybe they have even more income than predicted, they can even increase the repayment. But if business is not going well and they have less income than predicted, they can reduce the repayment by up to 50%. So thereby they can stretch the repayment schedule and they don't have the liquidity troubles. And of course, this flexibility helps our customers to make safer and smarter investment decisions and is completely automated. So the usage of the machine is tracked by another machine. The data of the usage is transferred automatically to Commerzbank, and then we process the data with our algorithms without any further ado for our customers. So it's not time consuming for them. And another interesting example for technology, which is changing how we interact with corporates, is a use case which we conducted with Daimler. So I think we all know that there are like 2 major trends in the car manufacturing sector. So it's electronic propelled vehicles and it's autonomous driving. And these trends, of course, change the business of car makers. And again, there are demands towards banking. So what Daimler did recently is to build up a process for automated recharging of electric trucks. So the truck could identify itself to a charging station, and that was done by a machine-to-machine communication and could get recharged automatically. But still, to make that end-to-end automatic, we of course need an underlying payment process, which is also automated and which fits into this Internet of Things setup. And we could provide that by using the blockchain, which was hosted in the cloud. And also in this process, we made use of APIs and could enable the use case thereby. So I know this sounds a bit like a buzzword bingo game, but in fact, it's very crucial for our corporates that we provide solutions like this in order to evolve their business with us. And of course, this is where we want to position ourselves in the market.
Thank you, Matthias. Very, very, very interesting. Probably we are at the dawn of the IoT banking, Internet of Things banking, or something like that. Probably Germany is the first country where we'll see something like that due to the industrial background of the country. Okay, last 2 questions. Jamie, we touched one topic, which is SME banking. You know, to some extent, small medium enterprise has been neglected for a long time by banks. This is at least my impression, and at least in Europe, and this is one of the reasons why very likely it is one of the most disrupted areas by digital innovators. You know, we see a lot of fintechs which really concentrate on providing services to SME. May you please outline what has been the RBS experience on SME banking and what are your expectations in next years? Thank you.
Sure, thanks, Giorgio. I'm not sure if I'd go as far as to say SMEs have been neglected by banks, but I would certainly agree that it's been a notoriously challenging segment for us to serve and to serve well. And the reason for that is because it is a high risk segment, right? In the United Kingdom, up to 60% of small businesses will fail within their first 3 years. And so it's difficult for banks to lend money to that segment and or make profit from that segment. And as a consequence, I think innovation has probably been stifled there. That said, SMEs are the lifeblood of the UK economy, as they are the lifeblood of most economies. And so it's vital that banks really do support that sector. The banking group that I represent banks 1 in 4 of UK businesses. So, you know, our role is as big as anyone's here. And I think what's really been important is the recognition that running a small business can be hard. And so banks have needed to move beyond just the banking and instead think about the end-to-end support that a business will need. A big part of that for us has been helping SMEs to make the transition to digital services as we increasingly become a cashless society, you know, transition away from cash-based payments to digital-only payments. We've been leveraging kind of the open banking capability that others have referenced to really build an entire ecosystem around everything that a small business needs. So it's bringing together both kind of banking services along with accountancy software, tax filing, invoicing capabilities, marketplace activity, and effectively becoming a single portal through which the business can manage everything that it needs end to end. Can we do more? Absolutely. And I think as we kind of reemerge from COVID, you know, revitalizing this segment is going to be more important than ever. During the pandemic, we worked very successfully with UK government to get financing to small business. I think going forward, you know, we'll need to come up with new and alternative ways in which to get financing to small business, and whether the bank is not the lender, but can be the facilitator of crowdsourcing, peer-to-peer finance, etc. I think that's the real big opportunity. But we're excited about the innovation that's happening here, and certainly optimistic for our role in the future.
Thank you very much, Jamie, for the very interesting perspective from UK. I fully agree, by the way, with what you said.
Sorry for interrupting you, Giorgio. Can we take a few questions from the Q&A section, because some questions are very interesting, and I'm sure your panelists would love to answer them.
Okay, sure. Please, are you going to read the questions?
No, go ahead and pick the relevant ones for you. There's 8-9 questions in the queue. So okay. Feel free to choose.
Plus sign. Okay, I will do. I see a question from Mr. Mohammed Samir from the ADCB Bank of Egypt, Group Head of Internal Audit. And it's basically, the question is about, from a digital banking and security perspective, in a digital transformation journey, where you can see the highest associated risk which may affect the banking sector, and what are the related preventing control framework needed to enhance? Okay, it's quite a detailed question, but I would, let's say, rephrase saying, okay, what is the highest associated risk in a digital transformation journey? Maybe I will pick up here probably Joao for answering this. I don't know if Joao, you feel comfortable.
Yeah, no, happy to share some thoughts, and it's a hard question to answer, but and I'll probably distinguish between, I think there are the risks of associated with digital transformation, as you know, as Chris Skinner was saying before, right? A number of banks will not be successful in transforming to the digital world and will end up being bought, and so that's one type of risk. I don't think that's the risk that probably the question is focused on. So the other types of risks are much more related with execution and cyber and kind of information security risks, and there in particular, the one that we worry a lot about and we put a lot of effort in addition to, of course, the bread and butter of cybersecurity that we have internally, and that is huge. It's helping our customers with their own cybersecurity, right? So we see a lot of, and particularly throughout the pandemic, we saw a surge of a lot of bad activity from bad actors around phishing, getting people's banking accounts details, and then going after customers' deposits, transacting on that.
Cyber risk is definitely one of the top.
It's a huge, particularly of our customers, and within Europe, for example, with the introduction of PSD2 and with strong customer authentication, the way the regulation is framed, it puts the burden on the customers themselves, right? And a lot of customers don't know how to deal with that, and so we find ourselves in a position that we need to help our customers deal with that.
Absolutely, yeah, very, very, very good. I see another question. This is a spot on for Mr. Kumar. The question is, we see today a number of there is a lot of hype about crypto, and we saw first the cryptocurrencies with Bitcoin. Now we see stable coins like DM and Libra, and also CBDC going to be issued by central banks like the yuan, the digital euro, the digital dollar. What do you think is the evolution era in this payment space, and how banks should plan to align to those challenges?
Yeah, great question. I mean, I'd answer within the realms of what I can answer, because this is also a topic of regulatory relevance in terms of what is approved, what is not. But what we all bankers have to think and understand is the fact that the changing mindset of consumers, right? The new generation are coming in, and the generation are challenging, like we did when we were kids. We always challenge the status quo. So everyone is challenging the status quo. I was a part of some of the forums where a young college pass out just came to me and he said, listen, I know you guys are all great bankers, but tell me one thing, why should I put my money in the way you want me to put my money into? And why should I use it the way you tell us to use it? And why should I use it when you use it, which means reference to cutoff times and et cetera, et cetera. And these are all apt questions we all bankers have to start asking. And that comes with the relevance of the currency. So as part of the same question, he asked me, why should I put the money only in, let's say, dirhams? I decide how I put my money, whether I want it in dollar, I want it in digital gold, I want it in cryptocurrency, I want it wherever. So, and I said, absolutely, you have every right to, but understand that the market, when people lose something, that's when people cry and say, why aren't people regulating it or managing it and so on. So from a payments perspective, my view is absolutely clear. At the end of the day, the currency of transaction is just a unit. Whether it's a local currency, whether it's a foreign currency, whether it's a digital gold, whether it's tomorrow a form of crypto, or I would call it a digital asset, or multiple asset. And not just only one, it's also about how do you use a transaction. For me as a customer, now when that person asked me this question, I also had this idea. Why only one form to be used in a transaction? Why can't I split my payment between a credit card, a debit card, a dollar, a gold, a crypto, and anything else? So from a payment perspective, your channels, payment channels have to be ready in what I call reading a token or a unit. A token is maybe a single currency, maybe multi-currency, maybe multi-asset, or a combination of assets. I think that's what you should be ready if you're a payment service provider.
Okay, very clear, Mr. Kumar. Thank you very much for the question. I think we are now abundantly out of time. So at this point, I say thank you very much to all the panelists for this interesting discussion today, and I give the floor back to the organizers. I think there will be probably some 5 minutes break at this point, and then we will be back with the discussion for Banks of the Future. Thank you very much, and see you next time.
Thank you.
Welcome to the tomorrow of retail banking in the Oracle Cloud. A place where disruption is your reality, and digital agility is the cost of entry. This is a world that rewards those who embrace bold ideas, fueled by intelligent data. This is a place where banks are liberated from a physical location, freely flowing intelligent digital services to customers everywhere. As these customers and their banks are made smarter with every transaction, and each interaction becomes a map to a shared financial future. Moving beyond transactions to nurture predictive, secure, invested relationships. Relationships built with the key to unlocking true wealth: customer intelligence. The ability to confidently make every choice the smartest one for your future. Banks, businesses, and individuals working in harmony. Creating a dynamic, intelligent financial ecosystem that is wherever we are. Take command of the digital age. The future of retail banking in the Oracle Cloud. Welcome to the tomorrow of retail banking in the Oracle Cloud. A place where disruption is your reality, and digital agility is the cost of entry. This is a world that rewards those who embrace bold ideas, fueled by intelligent data. This is a place where banks are liberated from a physical location, freely flowing intelligent digital services to customers everywhere. As these customers and their banks are made smarter with every transaction, and each interaction becomes a map to a shared financial future. Moving beyond transactions to nurture predictive, secure, invested relationships. Relationships built with the key to unlocking true wealth: customer intelligence. The ability to confidently make every choice the smartest one for your future. Banks, businesses, and individuals working in harmony. Creating a dynamic, intelligent financial ecosystem that is wherever we are. Take command of the digital age. The future of retail banking in the Oracle Cloud.
We move to panel 2, Customer Onboarding Creating a Unique Digital Journey. Moderating this panel is Mr. Salim Ahmad, Chairman of the Digital Banking Committee at UBF and CIO at Sharjah Islamic Bank. Mr. Ahmad has more than 26 years of experience in information technology. Mr. Ahmad, over to you.
Hello, gentlemen. Ola, can you just switch on my video, please? Can you see me, guys? Yes.
Yes, clearly.
Yes. Thank you. It's nice to be back again. We've been having a great event, a great speech by Chris Skinner, and the previous panel was amazing. Great insights from the panelists, as well as the questions were amazing. So now we move on to our second panel of the day, and I'll be moderating this. And I just would like to introduce you to our esteemed panelists one by one. And we have an amazing lineup. Firstly, let me introduce Mr. Olivier Crespin. Olivier Crespin is a co-founder and chief executive officer of Zand. Since taking on this role in 2018, he has focused on leveraging hybrid digital banking strategies to establish Zand as the first fully digital bank in the region, combining both retail and corporate banking. He brings over 20 years of experience across Latin America, the USA, Asia, including CIMB Bank, DBS, and Citigroup. Welcome to the panel, Olivia. Next, I'd like to introduce our Mr. Omar Al-Adami. We are very privileged to have you, sir. He's our group head of retail banking in the National Bank of Bahrain. Bahrain has made leaps and bounds in the era of digital, and I'm sure that he will add interesting insights. Mr. Omar focuses on new customer-centric fintech and digital solutions, not only for the local markets, also for cross-border market segments. He's currently spearheading the bank towards the digital future. Our next panelist is Mr. Binoy. Mr. Binoy Grange is OneSpan's chief technology evangelist. He brings a lot of extensive experience and deep industry insights with customers, partners, and he focuses on customer-centric anti-fraud solutions, especially in identity verification management. It would be great to hear his views on this aspect of the digital journey. Our next panelist is Mr. Shahid Khan. He is an industry strategy leader at Oracle, a great entrepreneurial flair, a lot of thought leadership with more than 25 years of industry experience, and working in techno-functional consulting roles with Fortune 500 companies in the USA. And we would love to hear the views from across the fence from a large vendor like Oracle. Our last panelist is Ms. Sabrina. Sabrina is a specialist in user experience. She's a professional in engineering psychology and cognitive economics. She's currently a senior researcher in UK at Valtech, and she's a frequent writer and speaks about UX and UI and user experience across the world. So welcome to my panelists. It's wonderful to have you here. And I hope that you're having a great day today. And I hope the previous panel was okay. So Mr. Olivier, I'm not able to see your video. Mr. Olivier, are you there?
Yes, I'm on a video. I see myself on the screen. I see you as well, Salim. Really nice to be here.
Have a very good morning to you, Mr. Olivier. And my first question will be to you, Mr. Olivier. It's a great pleasure to have you on the panel. You are indeed, Zand is the new kid on the block. And congratulations on obtaining the CBUA license to operate as a pure digital bank. And we are very privileged to have you here. And we'd love to hear from you. What is your USP as a digital bank in the UAE? Okay, what challenges has you faced to reach your current stage, and how did you overcome it? And we would love your experiences, especially touching upon also your Asia Pac and in India experiences. We would love to hear from you, Olivier.
Yes, thank you, Salim, and good question. So, USP of the digital bank, I think first is I like to say what is a digital bank, right? So there are two words in it, digital and bank. So that really means you need to balance two kind of DNA, the DNA of banking which is about financial expertise, risk management, compliance with regulations, and all this you obviously don't want to compromise at any point in time. And to create something different, right, which will allow you to differentiate yourself and fill some gaps that you may have, you have to combine it with a DNA of digital, which is more about customer centricity. So you build a product around a customer need and not around a bank need. Second is that the data element is also very, very important. You need to have a very strong analytic platform to be able to offer client the best opportunity, and as well to be able to assess better the risk, right? Where you want to give a product to a client or a loan or anything. So if you need to, you have a great data analytic platform, you are able to give a better rate, for example. Last point is obviously technology. Digital bank is building on the latest technology. So for example, we have the cloud. It's very important because it gives a lot of scalability and computing power. Also, you have a very kind of middleware is very important, where you Kubernetize and containerize things, applications, so you can be very agile in development of new products and making them available to your client. And third point is on the technology side is to be open, right? To be open to other solution like with startup or fintech or other more established partner who can complement your offering very nicely. So I said that in fact these days to be able to provide a very good experience to client and differentiator, you need to build a platform and not a bank. You build a platform with a banking license, in fact, that's allow you to be embedded into the wider ecosystem and be able to come up with product ecosystem link financing, for example, like ecosystem link products that you are going to give to people because you understand very well the ecosystem through the data you have. So on the key element to come back maybe to the onboarding, which is the topic of this, we managed to, for example, do a onboarding on the retail side in 19 clicks. Okay, it may not mean much, but if you do a comparison worldwide, is I think the lowest right now. And we have been able to achieve that through thanks to what was available in the market. And I was very pleased when I came here to see a lot of information available, right? ID in UAE, right, has a lot of information and can be verified digitally. It's very similar to what you see in other countries like Singapore, Indonesia. May not be as advanced as what you find in India with Aadhaar, but I think that with the UAE pass, you know what's happening right now with UAE pass, etc., we are going to get there. So on the retail side, you have this kind of on onboarding, talking about the onboarding differentiator, because people want to save time, they want, and I think onboarding is usually quite painful in many banks still. On the corporate side, to be honest, it's a little bit more complicated because as you know, in UAE, you have, I think, over 50 registry of corporates, and not all of them have a kind of digital API kind of connectivity. So it's a challenge, to be honest. What you have done, we have connected with maybe the 10 will represent 80% of the corporate, and the other one, the process may be a little bit more complicated because of the infrastructure. But I think in 80% of the case, we'll be able to open an account in one day versus, you know, it can take a few weeks in a year. So we have done a lot of this, and I think we got good support, I think, from the authority here, because as you said, we are having a license from central bank. There is already a lot of bank here, but there is really feels that there is a need to have a full digital bank, really again built as a platform which is able to support the growth of the digital agenda of the UAE, right? To be able to integrate with corporate, to be able to be there in the day-to-day life of people when they need the bank, right? So that's in a nutshell a few points I wanted to.
Olivier, wonderful inputs, Olivier. In fact, what you just mentioned about your pillars of analytics, technology, cloud, scalability, ecosystem ties in with what Chris Skinner also mentioned, that it's not a digital project, right? It's an ecosystem. You have to build the partnerships across, and that really ties in with what Chris said. It's great to hear your insights, and also on the corporate side, that's a good coverage you gave us. And I'll come back to you on another point, but let me give other panelists a few chances to talk. My next question is to Mr. Omar. Glad to have you here, sir. And Bahrain, we really admire Bahrain in this region. It has demonstrated a lot of digital competencies. It has progressed in leaps and bounds. We talked about digital ID, open banking. They were the first country to mandate open banking in the region. The benefit infrastructure are great examples, right? Worthy of emulation. Can you share your experiences as an advice on creating an ideal customer onboarding journey? Okay, and did that journey help you to see how can you cater to the unbanked, for example? So we'd love to hear your insights, Mr. Omar.
Of course. First of all, it's a pleasure to be here. Thank you for having me here. Pleasure to be representing Bahrain and the National Bank of Bahrain. And great insights so far. So basically, as you said, Bahrain has been pioneers in forfeiting, especially with the central bank, which we appreciate as the financial industry today. They've been working very hard in regulating a lot of products and services in the digital space. So eKYC is one of them. The other one is, as you said, open banking, crowdfunding. So we're very, very pleased, and we're very lucky to have such an advanced central bank to actually advance our propositions going forward. I think, as Olivier said, with the digital era or digital space today, there are different pillars. So in specific for the eKYC or the digital onboarding of customers, it doesn't only go back from a technology side which will enable us to actually shorten up the process or give the ideal customer experience for customers. But it always starts with the customer centricity. As National Bank of Bahrain, we have the digital first strategy, which focuses on centricity and personalization. And the way we did it is we actually had defined personas. We had focus groups. So we literally got two couple of ideas or opinions of NBB customers, traditional customers, and what would you like to actually see in our digital platform in terms of onboarding. And we got non-NBB customers, and we're like, okay, what does the industry wants? And understanding your customer is the first step of doing everything that goes around them, right? So when you start understanding your customer more, you'll start understanding their behaviors. And obviously, you will build a digital onboarding process or experience which caters for them. Now, other pillars that we leverage on as well is the as you said, central bank and benefits have provided a lot of tools and APIs to actually utilize, whereby data comes in flow, and we have the right data to verify the customer properly from the governmental official the ledgers. Then you have an ecosystem, as you said, where you don't ask the customer to upload a lot of documents. You literally don't ask the bank employee to verify a lot of documents, because that document is verified. With that comes a lot of links, right? So Omar is married. So in the government says it's married, then I know that Omar now is married. I can actually fetch the data of course, after fetching the consent of Omar. So, and Omar has children. So you start linking everyone together. You start having more data to analyze more. And the more you know about the customer, the more you can offer, and the more you understand the psychology behind the customer behavior as well. Of course, we work in governance of the PDPL, which is the personal data privacy law. to ensure that we have also a secure channel for the customer. And one of the main pillars of the customer and the banking industry is trust. So we always maintain that. Now that evolves as we go, and the rules change rapidly in this digital space, and we're coping up with that. So I think reaching to a bigger mass is one of the obviously objectives, or maybe one of the advantages of having a digital digital appearance in the market. And with the data that you have, you can literally start utilizing the underbank. Monetizing your data will allow you to reach the underbanked, serve them better, and to the unbanked as well in the future. So different pillars. I think to sum it up, we start with the persona of the customer needs. Then we look at what the bank is actually doing, being more efficient. Today, digital onboarding speeds up your onboarding to 2 to 3 times in terms of time. And that literally hits the customer lifestyle. So as Olivier said, I'll give you an example. You don't have to drive to the bank anymore. You don't have to wait in a queue for 15 minutes. You don't have to sit with a customer representative for another 15 minutes to open an account. You can be sitting, heading to the gym, obviously opening your account while driving. That's not recommended, but just an example. And hit the gym, get your account activated in 5 minutes, put some money and start using the account. Now it becomes about how do we develop the right product for the right customer and offer the right product at the right time for the customer need. And I think that sums up the ideal digital onboarding. As we go forward, the more we get in terms of leveraging on other strengths, the government entity, the central bank, other data inputs, partner up with fintechs, for instance, the more we understand, the more we make that experience simpler. And today, less is more. Other bigger corporations are doing it, and we're striving to do the same.
Thank you, Omar. Wonderful insights. I loved your insights on the concept of customer centricity, right? How do you create personas and personalities and understanding customer behavior and the right product, the right time to the right customer. Awesome insights from Bahrain here. Mr. Omar, thank you so much. I will hold your thoughts. I have one more question to you down the road, and great thoughts. Let us now ask Sabrina. Sabrina is from UK. She's an expert in user experience, right? She comes with this feel of, what does the user experience mean to the customer? Is it emotional experience? Why does a customer buy what he wants to buy? My question to you, Sabrina, I would really love to hear your thoughts. I'm sure Mr. Olivier and Omar will benefit the most from your insights. Is seamless user experience, right? We talk about this term is bandied about very often, right? Is it seamless user experience is the ideal, right? Now, for you to develop an engaging UI and UX, right, you can get an agency and do the nice fancy website or the mobile, and that's an easy peasy task to do, with a lot of tools to do that. In your opinion, as an expert in user experience, what do you think are the key success criteria to achieve an engaging and seamless user experience? And what are the typical obstacles which organizations will face or the customers will face to achieve that state, right? It could be regulation, it could be compliance, the journey gets broken many times. I'd also like you to touch upon the concept of the user experience as a philosophy itself. So an experience with Amazon is different than an experience at a branch teller or an ATM. So we'd love to hear your thoughts, Sabrina.
Yes. Thank you so much, Salim, for the introduction. Seamless user experience, like you said, it's a kind of buzzword. Everyone talks about seamless user experience, that this is the goal, but actually it's not in all cases useful. So especially in finance, sometimes you have to build in friction because users are making big decisions. So they have to think, make a pause and reflect on their decision. So it's really a danger to create a too seamless user experience. And behavioral techniques like nudging are not the right thing to do in finance. So I myself, I'm quite cautious with these methods because sometimes it can be manipulation even. So I think users should always be able to make an informed decision. That means getting the right information at the right point in the journey. And that's what Omar mentioned, personas. This is also how I'm actually working looking at users' needs and emotions, creating personas, and then looking each step of the journey, what emotions, what needs do they have, how to best support them. And I've also done a lot of projects in finance, and I'm always fighting against it when people say finance is irrational and we don't need users' emotions. And it's quite the contrary. When you buy a house, you are not actually buying a house, you buy a home. When you buy a car, you're buying freedom, fun, adventures. So you always have to look at the underlying emotions and needs that are fulfilled. And yeah, personas are a very good way to capture this and to really look at the individual, not like in market research, the average user, because there is no such thing as an average user. So we always have to look at the individual and what they need and want. Yeah. What's special in finance? Of course, we have all these legal requirements, compliance, but there again, there's a danger when we burden users too much with legal and compliance stuff. They might not do it at all. They might find a workaround. So like with passwords, when you force users to create a very difficult password, they might just drop out of the whole onboarding process. Yeah, so key success criteria for a good user experience, especially in finance, is looking at the underlying needs and emotions. And we heard about fintech before here in the UK. I've been at conferences, and those fintech startups, they do so much user research and they really look at their psychological drivers. They are doing a really brilliant job. And also in other user research, users were just talking my ear off. Oh, I want something like Monzo. I want an app like Monzo. Yeah. So fintech is yeah, they are doing a very good job, I think. Yeah, because they do user research. And
great insight, Sabrina. You talked about the success factor. Look at the underlying emotion. And one new thing you've told is look at the underlying psychological drivers, right? So, and what you said matches with what Mr. Omar is also trying to do and Mr. Oliver is trying to do. Excellent inputs. And I'm going to ask you some more down the road. Please wait for that. Well, we'll also now give a chance to our panelists. Next panelist I'd like to ask is Mr. Shahid. Mr. Shahid represents Oracle, the big three in the world. They do a lot of stuff for many banks. There's almost no bank who doesn't have an Oracle footprint within themselves. And you're now taking the role of the strategic leader in that. So you represent the other side of the fence. We'd like to hear from you. How does companies like Oracle, being in the forefront of such technologies, are helping the financial industry to strategize and overcome digital onboarding challenges? Have you looked at this particular challenge? And we'd also like to hear from you from a technology standpoint, what could be the associated technologies like AI, machine learning, open banking, which can aid in this process? So we'd love to hear from you, Shahid.
Sure. Thanks a lot, first of all, and good afternoon, good morning to everybody. Thanks, Salim, for having me. Pleasure to be here with such an esteemed panelist. Feel privileged. So now let me get back to your question quickly. I'm not sure if how many people or banking folks know that when people use the word or get to hear Oracle, is just technology that comes to mind, but that's not what we all are. All right, just an example. So I'm called an industry strategy leader, and that's for a reason. And the reason is I've been in the banking industry for about 25, 26 years now, and I've worked for banks. I've worked for Mashreq, for example, for about 10 years. I used to be in the US from East Coast to West Coast in the FSI space and back to the region. So we have resources in Oracle who are industry experts besides being technology experts, just so that you know. And now coming back to the question of yours, Oracle obviously in their kitty has about 2,000 plus banks globally. So the likes of Cities, the Wells Fargos and BBVAs and you name it, we have it as our customers. And obviously the wealth of information that we carry from them while helping them build their architectures and their systems and applications, we carry that intellectual wealth also, and we actually bring it back to the other parts of the world in terms of just banking knowledge and the trends and the latest technologies and the latest processes which are being complemented by our technologies, how we're enabling the banks and impacting banks' customers. So obviously, so it's a deadly combination of people, having the industry knowledge at the same time. They are at the cutting edge in terms of the knowledge and experience, of technology as well. So now, so you talk about cloud, where the whole industry is going. Besides all the other industries, you talk about even public sector, you talk about retail, you talk about telecom. Banking is also, moving at a very high pace towards cloud. And again, there is with a little bit of caveat, especially talking this region, with the regulation, central bank regulations in terms of going towards the cloud, there are certain areas where central banks have still not eased up and the regulations are tight. But even within Middle East, if you talk, Jordan is a glaring example where central banks have allowed them to go to the cloud. Anything they want, they can take it. You talk about Africa. Africa is completely on cloud. You talk about Europe on cloud. You go west on cloud. So I think it's just a matter of time, and I think there are leaps and bounds which this region and especially UAE is taking in terms of going towards the cloud, and very soon probably you'll be there. So specifically about now talking customer centricity, I heard amazing things in the previous panel discussions, and now people talking about customer centricity, people talking about in what we call customer 360 degree, understanding what their customers are, what their needs are, what do they want, what they will want. So it's not just about customer onboarding. And it's amazing to see, I'm not going to go to my father's generation or grandfather's generation, and I have amazing examples in their generations as well. Let me just limit my discussion to myself. I remember the days when I came to UAE about 26 years back, and it took me about 3 days to get my onboarding kit, which had the ATM and checkbook and all. And that was a revolutionary step from Mashreq Bank, that they have actually transformed the entire onboarding process and squeezed it to 3 days. And now when I hear Olivier saying it's about clicks, no more days, that's like 19 clicks. That's just music to my ears. And that's exactly what we help banks enable in terms of customer experience. So it's the matter of the seamless, smoothest, frictionless, minimum number of clicks with the technology enablement that we can pass on, not to just to the banks. It's about the ultimate customers. So if customers don't feel a change in their daily life, all the investments, efforts, the world's best architectures, cloud, don't matter at all to me. When a customer tries or wants to interact with the bank, how easy it is for a customer to interact with the bank and gets his needs fulfilled, that's what matters. Not just that, but bank understanding the lifestyle of a customer. That, hey, he's a golf player, he enjoys playing golf, he goes to ABC golf courses, he's got 2 kids, one going to the college, another at school, this amount of school fees in there, aspirant to a university in the US or Canada. The guy's got DBR already of a 30%. He has a pocket still little left in there, about 20 or 25% DBR in there, and looking for a retirement plan in next 10 years. How can we actually maximize his exposure and get him the best plan of retirement, school fees for his kids, and his leisure activities, his personal likes and dislikes, his wife's shopping trends, where he gets his credit card blown off like all of us. So point is, It's about banks not just simply understanding the customer, but it's about how they can complement his journey, his lifetime journey. And obviously, all of this is driven with technology, and we provide that right from, you talk about digital assistance, you talk about financial assistance, you talk about open banking solutions. We have just sold one to Mashriq, and I was delighted to be a part of that. Fintech plays, so we have an entire pool of about 1,500 fintech companies across the world, which we bring and take from one corner to the other corner of the world. And we have curated them on our cloud technology. So, and we have taken things like machine learning and artificial intelligence down to the database level, all right? So it's no more, oh, I wanna jump into the space of AI, I wanna do something on AI, and then I have some external, I'm just using simple language, external components to attach to be able to use AI or ML. No, we have actually taken that technology down to the database level. So you talk about fraud prevention, it's already taken care of the entire statistical modeling, classification, prediction, clustering, anomaly detection, time series forecasting, all of that is built in at a database level. So it's no more a fraud detection, it's about fraud prevention as just as an example. And likewise, I gave you the example of customer onboarding. It's not just about saying hello to the customer, sir, here's your ATM card. It's not about that. It's about, hey, we know, as Umar was explaining, I'm a married guy, age 45, work for X company, earning this much, having, this is my personal profile, this is all who I am, and this is what I'm looking for in the next 10 years, and how a bank can understand that from day one. That's what I call onboarding. It's not just about issuing an ATM card.
Wonderful, Shahid. You touched upon it nicely. It's not only about the first entry point, it's about his whole, how can a bank live with the individual throughout his entire life, and the solutions around it should be planned by the bank. Wonderful insights on this, Shahid. Next question is to Mr. Binoy, and Mr. Binoy, I've kept you for last for a reason, and throughout this panel for the day, you may have heard all the positivity around digital onboarding, user experience, technologies available, etc. You represent an organization which is in the forefront of authentication, mobile security, fraud prevention. I'm bringing the bad words into the pics now. These are the unsung soldiers, so to speak. They are necessary evil, okay? You know, the UAE is one of the few countries which has a national identity. We have a UAE pass, and I'm sure Bahrain also has similar ones. In your opinion, Binoy, how do we balance the need for a robust security versus providing a seamless and engaging user experience? You know, we talked about from Sabrina and Omar and Olivia, and what could be the steps which an organization should take in ensuring that process, in meeting the business demand, right? The business drives it. Mr. Omar, Oliver want revenue, want engaging customers, want more customers. And how do you advise customers, banks like us, to take that step-by-step approach? You can also talk about the emerging threats and hackers which are in play in this space. We would love to hear from you, Binoy.
Thank you very much, Salim. Very pleased to be with you today. And you're right. One of the biggest challenges today as organizations are moving to fully digital process is clearly the need to balance user experience and risk. But in fact, this shouldn't be a trade-off between the two, but rather than how can we deliver both? So an experience with the proper security, and while we ensure in the background a frictionless digital user experience. Because ultimately, the goal, as we discussed before, is to achieve the highest adoption as possible. That's what we want. And the good news today is that the technology is evolving very rapidly. So with biometric capabilities to replace static password, with real-time machine learning to detect and to work based on data, trying to find some anomaly in the background, we are capable of delivering this kind of trade-off and delivering the user experience with a proper security. You mentioned UAE, and that's a very good example of a country that is leveraging technology to deliver an ultimate user experience based on electronic identity. And as mentioned by Olivier, we do see similar initiative in different countries, and now there is a new initiative in EU as well to move to this kind of decentralized identity as well. What is very important to consider is that this initiative, most of the time, they are country-based. So each country will have its own method. So to leverage these different capabilities, operating in a highly regulated market and in a fragmented market, is very important to select the proper digital platform that is going to be able to adapt to your specificity, and as well that is going to help you to comply with the regulation in the different countries where you're operating, while adjusting the user experience to deliver both security and convenience. And this leads us to the second part of your question regarding the trends for digital banking for the future in light of the threat vector that are emerging. So let's discuss a few seconds regarding the threat landscape. With a shift to the digital channel during the pandemic, we have seen financial services facing sustained attack targeting loan and credit applications. So really, we have seen a shift in terms of attack in application lending. And on top of that, we have seen a strong increase in mobile usage. So 200% increase in mobile banking. But in the meantime, we have seen as well a very strong increase on mobile attack rate in Q1 2021, an increase of 43%. So on top of that, if we combine the growing popularity of real-time payment and the fact that users are using your mobile phone, it means that the money is moving very rapidly, very quickly. And once it's gone, it's almost impossible to get it back. So this makes a radical rise in transfer scam, especially ATO scams. So it's very important to find this kind of attack. And as you mentioned, at OneSpan, what we do recommend is a multi-layer approach to address this kind of attack. And we support a wide range of protocol based on type of action and risk associated with the action. So the layer I'm referring are mobile application security. We discussed about an increase in mobile usage. We have, and there are some solutions that are securing the mobile application. This is named application shielding. And this kind of solution can protect your application against keylogger, Trojan, and other malware. The second point that we discuss is replacing the static password by multi-factor authentication based on biometric. And the goal is really to deliver a seamless user experience to the user to access his application, whether it is on the mobile or online. And finally, the last point is use data-driven fraud detection capabilities, combining technology like behavioral analytics, passive biometric, threat and device intelligence to deliver intelligent adaptive authentication. The goal being to dynamically adjust the authentication method based on the risk of a transaction. So what is critical to understand is implementing this kind of solution is not going to be done in one day. This is clearly a journey. That's something that we discussed. It's an evolution. It's an evolution. You need to start from what you have. You need to start implementing, understanding the needs and the different use case for your user and adjust the experience. So you need a solution that you can consume on demand based on what you expect. So really, as much as you can, as soon as you can, start collecting some information about your user, start understanding the behavior, and really adjust the experience of your user along the time. More you will collect some data, the better you will be able to perform some risk analysis in the background without altering the user experience. So that would be my recommendation. Start by implementing some available capabilities, replacing static password by biometric, start using application shielding to secure your mobile application. But in the meantime, in the background, start collecting some information regarding the behavior of your user, passive biometric. So then you can create some profile and you can really deliver some advanced user experience based on the expertise that you have from the user based on the data.
Awesome, Binoy, wonderful insights. As you said, it has to be a journey. Take it slow, and understand the threat vectors, especially in the pandemic. There's a sustained attack on banks, and we have also seen that in this part of the world. Wonderful insights, Binoy. Thank you so much. We have all of our panelists have had something to say, and I'm also reading the questions coming through. A lot of interesting questions. So my next question will be to Olivier, and maybe a follow-up with Mr. Omar. A question was interesting question, but I'll also ask it in my next way. You said 19 clicks to a retail customer. How many clicks for a corporate customer was an interesting question. So I will ask you to elaborate a little. You are one of the digital banks which are not only taking care of retail and also corporate. That's a unique challenge for you. Typically banks focus on digital for retail, and corporate is a nice segment to focus on. It could be small business, it could be corporate. So the question was to you, first of all, is the concept of digital onboarding and the digital journey applicable to an SME or a corporate? Does it make sense? Because there is, as you rightly said in your opening remarks, there's not many APIs available for you to do customer verification, right? So there is a face-to-face. Yes, technology like digital signing can ease the pain of interaction. So what would be your thoughts on onboarding a business, a small business, or a corporate, Olivier? And maybe Mr. Omar can give his thoughts on that also.
Right. So on to onboard, as we mentioned, and again, a lot have been mentioned by the other panelists. Right, it was really great. So onboarding a corporate customer is quite a lot can be done digitally, but you still have some limitation, right? So you have particularly, I know there is a law which says that digital signature is approved, but there is always a lawyer telling you, and that's not unique to UAE. The same issue in India. You have a law in allowing digital signatures, but the lawyer will always say, but the day is going to go to court. We don't know how a judge is going to accept or not, right? So that's one important thing where probably a little bit more clarity would be needed. Also on the corporate side, another element is there is still an obligation to cite the documentation, right? So that's obviously, if you want to do something digital, is a big limitation, because you need to go cite physically the document available. And so in this area, there is a lot of new solution available. I think that eKYC solution, making a document available and certified, are going together as well with some regulation on open banking, or some people say open data, in fact, would be needed. And we see what happened in some countries, like I would say, obviously Europe, right? Is a lot of things going on in this area, Australia as well. Some country in Asia, starting Latin America, doing good things. Bahrain is doing a very interesting thing, as Omar mentioned. This will be needed, right, as well, to have the full kind of digital tool kit to be able to do a full digital onboarding, even for corporate organization. So I always say, is banks and regulators are aligned, right? We all align on, we don't want to onboard the wrong guys. We don't want to facilitate any kind of non-legitimate activity. The point is how are we getting there, right? And it's always the story. So I always say that, right? If you go to see a central bank and you say, okay, I'm going to do digital onboarding, do you agree? Of course, central bank probably going to say no. So you need to explain, okay, I'm thinking doing digital onboarding. This is how I'm going to do it. This is a risk identified. This is how I've mitigated the risk. And this is a residual risk. There is always a residual risk that potentially may be ready to accept. And when you have alignment on that, it's really become fact-based, okay? You demonstrate your technology is sound, that the way you deal with the data is appropriate, and say it can be, I think everybody would say it's great because it's even better, right, than doing it physically. And we realize a lot of things we have been doing, even a big change happening, you know, obviously with COVID, a lot of things we were not doing before digitally are more and more accepted. And you can see amazing solution when you can sign certified document using solution like DocuSign and so on. So all that is being accepted more and more, and it is very positive. So I think on to answer your question, on a corporate side, you can do a big part digitally, but I think the next big move will be more open banking kind of alignment, acceptance of digital signature as well, a little bit clearer. And as well, I really look to DeFi, decentralized finance, as well to bring the last piece, right? To make sure that it's very, to address some of the Benoit kind of point about in terms of security and so on. I think the technology is very sound. And we are dealing right now, talking with Greg Kidd. I don't know if you know him, but this guy was on the first on Twitter, right, to working with Jack Dorsey as well, Square. And he has a project to create a global ID, right, that is portable and where the information is verified using the latest technology. So we are very hopeful that is going to come and help us to complete 100% digital onboarding. And not only will be digital, but it will be much safer than a traditional physical onboarding event.
Wonderful, Olivia, great insight, and absolutely digital signatures would accelerate that adoption very well. I'd like Omar to, if you have a follow-up on that, you would love to hear your thoughts on Bahrain, especially on this aspect, and you can also touch upon certain aspects of the eKYC, how different Bahrain is doing it with the benefit platform that would benefit the audience who are listening here.
Right. So just to complement the discussion, I think to start with the SME and the corporate segment, we'll start with we're doing something here in National Bank of Bahrain. We're actually looking at the user experience, UX, UI, and that perspective. And we're working towards some sort of a unique onboarding journey for our SME and corporates. But before we go there, we adapted the mindset already. So the digital mindset is very important for you to adapt, because that will actually start turning or drive the whole initiatives and obviously boldness of it, and to become more creative in that perspective. And we do accept that we might not achieve the 100% digital journey for such segments. So we need to go for the hybrid solution. And how do we utilize the technology to become hybrid? And when I say hybrid, as Olivier said, there are a lack of APIs today. There are a lack of governance around that segment in specific, whereby maybe now I need to start onboarding the SME through a web portal or an app. But then I make stop and continue, like save and resume as an omni-channel approach, and send someone with a tablet to continue that journey. Now, from a from a corporate experience or some sort of a journey, it's not going to change. He's still going to use a digital method, but someone is going to go with a tablet to complete that. Basically, the governance will be verified. So the governance will be verified with all the rules and regulations. That's number one. The second part is also I am actually taking the customer signature, whether it's a with signature or actually a digital signature in this perspective, and as well as I'm allowing with the tablet I'm going with, I'm allowing geolocation. So I'm actually taking every audit trail of the step, where the customer is going, where the RM is actually meeting the customer, is it a legit meeting? All of these technology, the point is you have a lot to explore and you have a lot to innovate in this space. It's utilization of the digital platform that you have using different methods, but it all starts with the mindset. Now, there is another aspect as well, which we also touched on, is basically becoming the advisor. And more and so today, as the National Bank of Bahrain, we take ESG and sustainability very seriously. And we actually want to help our SME in such difficult times with COVID coming on. Now, with that, we have created some sort of another mindset, is how do I become an advisor to my SME and corporate to sustain them and become their strategic partner for us to actually grow them with us, and they become our ultimate corporate customer at the end of the day. It's a win-win situation. We're growing together. We're mitigating most of the risks that we have, and we're trying to identify the journey and becoming their advisor by giving them what they need to ensure sustainability and consistent growth pattern with their organizations. Now, if you complement both of them using that digital channel, I think you will reach to a new height. As I said, we are working on something very unique. The team here started this journey already. A lot of challenges, but again, leveraging on some APIs that we have with the government to authenticate basically the corporates. We are going to reach that very unique, and we are going to build on that. So whenever we have, as Olivier said, open banking provides us with another set of APIs that we can leverage on, we can cut down that process time from an hour to 5 minutes, again, utilizing that. So it's an ongoing journey that we have. The mindset is there.
And Omar, thanks, Omar. In fact, I can give you some insight on how similarly UAE Banking Federation, especially the Digital Committee, is talking with the regulators to increase the number of APIs which the banks can consume, right? If you don't have API, you can't do much. And I loved your concept of enabling digital touch points, like taking the tablet to complete the journey, right? It's a wonderful, almost taking the bank to the customer. So that's a nice thought you brought here. I'll also now, just a little conscious of time, I'd like to now give some questions from the audience, interesting questions. I see Sabrina has answered one of them, but I'll ask this question, interesting question I'll point it to Olivier. A question from Mr. Jasbir. Do you think the banks of the future will be primarily technology businesses like Amazon and Apple? Do you think the future bank will be a bank, or it will be these providers like Amazon, Apple, maybe Etisalat, maybe STC? What is your view on that? How do we counter that?
It's a great question, right? Thanks for the question. In fact, it's maybe what I said at the beginning. We don't consider ourselves necessarily as a bank, but a platform with a banking license. That means that we are really, the future of banking is to be there all the time people need you, but maybe not be very visible, right? You have to be there, embedded in day-to-day life. You have when you look at human activity, 70% of any human activity end up into a financial transaction. So if you are there in this part of the customer journeys that we do every day, and just provide the pipe, the technology support, the risk management, the proper financial expertise to people, is what I believe banks are going to become, right? Where potentially your bank is always there with you, but you don't even know it's a bank. You have an organization which is just providing the financial services you need.
Awesome, Olivier. Would Omar like to add a little to that?
Sure. Again, they're disruptors today, and if we don't really come and let's say work along with them and partner with such, we won't be able to continue this journey properly. Because as you said, today customers are very unique in their thinking. They're not the old customers or traditional customers where banks are service providers. We're now more than just service providers, hence why we have to ensure shaking hands with different industries. And to complete that ecosystem, you've said something very interesting. Ecosystem is the key word for everything today. And in order for me to be sitting at home, ordering groceries or paying or selecting a college or a school for my kid, or even doing a lot of stuff today at the pandemic, you never thought that you will be doing workout at home, and you're doing workout at home. So in order for us to actually do a lot of this, we have to shake hands with the disruptors, who are the Amazons, the Apples of today. We see Apple having their own credit card. Amazon, they have their own checkout procedure, payment procedure, and the examples go on. So I think the key here is to have an open mind and be bold enough to shake hands with them, because that will complement your data. At the end of the day, all we know is today, also from a customer perspective. I'll give you an example. A year ago, you've gone to a restaurant that you don't remember the name, but probably you took a picture there. And once you go to that picture, you'll see what location it was and what basically the name of the restaurant, what country it was in. So the factual information that you have today through data allows you to start analyzing the customer behavior even more than the customer know about themselves. And here where you actually build that unique personalized experience, which is basically the segment of one at the end. So shake hands with the disruptors, and let's inshallah expedite that financial journey to everyone.
Awesome, Omar, and a great insight on that. You're talking about you don't need to. We have to have an open mind, complement your offerings, and as Olivier said, that's a nice term we can use. You're a platform having a banking license, right? You're not a bank, you're a platform, and so that's a nice mindset to have. One more question. I'll probably ask Shahid to take this. What is the role of big data in enriching the customer experience? Is it relevant? How are the leading banks leveraging data? And does it help in the 360-degree solution you were talking about and in privacy? Some thoughts on that, Shahid? You're on mute, Shahid.
Apologies for that. So let me just complement the previous question where Olivier and Umar left. So from our perspective, there are three models which we see rising. So there's a traditional banking, which we've all seen live through. Another is the platform, which Olivier talked about. And then the third is the distributor. So banks will turn into distributors, or you can say distributors will turn into banks, where they will not own banking products anymore. So they will actually collaborate with fintechs and open banking and APIs and everything, present that platform in it, and just be the distributors. So they will control the distribution of it, which means taking these solutions all the way to the customers and back and forth. Now coming to your question, which is big data and 360. So I think in the previous panel discussion, somebody threw a very good line saying, data is the lifeline now, all right? And that's what exactly it is becoming for financial services industry. So the days of people, saying data is gold and data is I don't know what, gone. It's about lifeline. If you want to live through, if you want to breathe, you have to know what your data is. So I'm not even talking about acquiring data. I'm not even talking about cleansing data. I'm not talking about setting the data right in terms of your data marts and data warehouses and big data and all of that. So that's thing of the past. All right. So banks don't struggle. Ideal good banks, they don't struggle on these perspectives. They already have this under control. So they're taking a step further where they are talking about enriching the customer wealth. When I say customer wealth, by wealth, I mean customer information. And I think somebody was giving the example earlier, the millennials and the alphas are challenging the banks, and they are saying, guys, you own the most critical, most important, most close to our heart thing / asset of ours. And guess what that is? That is our personal information. You have them. You have that information, our personal information besides financial information. So here is our question to you. You have that information. We give you the privilege of holding it. What are you giving us back? What are we getting in return? I think we don't have an answer for that yet.
Yeah,
so big data revolves around all of these questions and answers, I position.
On top of it, you put the data privacy rules of the government, and you talk about PCI DSS compliance and all. I'll take one last question. We have time for one question.
Sorry, maybe one point with big data is indeed you can definitely use this data to automate the service that you're going to deliver to the user. So big data is clearly playing a role. So you can define some pattern about usage and really anticipate what the user is expecting. So automation, and I think we discussed about it, is clearly very critical. And when talking, just to come back as well on the previous question, I think that as mentioned by Olivier, this big platform will embed banking. So will they necessarily become a bank? Not necessary, but they will partner with banks so they can deliver financial services when the user needs it. So that's the way I see it as well.
Thanks, Benoit. Thanks, great insight on that also. One question, last question. I have maybe a minute to go. We'll take one. I'll apologize to the participants. Not all questions could be answered, but I'm trying to cover that. Hopefully the speech of the speakers would have covered your questions. One question to Mr. Omar from Seif Properties is on Bahrain specifically. I know you touched upon it, and the question is, how rapidly do you anticipate organizations to embrace this change? And how much do you think a percentage of organizations are in line with the mission of 2030? So I know it's a Bahraini flavored question, but I think you can talk for the region. I'm sure that you have enough to talk about, which can help the audience in this room.
Sure. So I think the Bahrain 2030 vision is a very strong and very clear in terms of what we're doing in the fintech space. And how do we ensure that digitization is actually taking place in every industry, not just the financial industry? We started with Bahrain FinTech Bay in 2018. That was the launch of the as a hub in the region to actually start acquiring a lot of, let's say, the mindsets, but then the SMEs, the startup that will provide solutions for every industry. So, and we've seen an outcome in that. We have, for instance, the Bahrain.bh government portal, which today allows you to do, if not all, 90% of your transactions sitting at home. Whether you want to pay your bill, whether you want to actually verify your lease contract, whether you want to actually switch, or maybe get a let's say a real estate certificate from there, and it's all done digitally, which means that the processes and the engine is actually working. The ecosystem is coming together. We've seen another couple of industries as well taking the let's say the forefront in this. The traffic industry today, they're talking about blockchain technologies, whereby a bank can utilize from. So an auto loan could not only be the experience of the customer with an auto loan could start from the bank, but then could buy the car from the dealership, and then the registry is there, and the traffic department is there. So they're all coming together into that sort of ledger. Now that is another thing. So we're seeing the industry going forward. I think there are two elements. The financial industry is already taking care of that, and most of the banks today are adapting digital solutions. I think the other industries are taking also the initiatives to start with that. I would say we are not far away from reaching the ultimate vision of becoming a digital ecosystem in Bahrain and covering most of the major industries. I think we're at 40 or 50% in that. We still have a lot to enhance. I think with the Central Bank of Bahrain and the other regulations, PDPL coming on, open banking coming on, I think we are now creating that backbone for for us to actually start seeding the outcomes of it and yielding the bigger picture, which is embedding everyone into such platforms and continuing to build that whole ecosystem with one unified experience or one-stop shop to the customer. So we're getting there, and we have the foundations built. The mindset is absolutely right. So I think to answer the question right, we're getting there. In my opinion, we still have a lot to do, but we're at least 50% in terms of this.
Awesome, Mr. Omar. And I'd like to thank our panelists, Olivier, Sabrina, Shahid, Binoy, Mr. Omar. Wonderful to engage with you. And inshallah, we will also have an opportunity to meet face to face when this pandemic clears. And I really wish all of you a great day. And I just would also like to close the proceedings of the day on behalf of the UBF Digital Committee. We'd like to thank all the participants who have registered, who have taken their time to come. I'd like to thank the panelists in all the panels, Mr. Chris Skinner, Mr. Walid from Iktissad, Madam Ola, Mr. Jamal for their support, and our sponsors, Oracle, OnSpan, and Manage Engine. We have had a great day today, and please do not miss the next day tomorrow. We have two wonderful panel discussions on relevant topics on compliance and the banks of the future. We're also having a great presentation by Ronit Ghose, the Global Head of Citi for Research. We'll see a great insight on the future of money. Is cash still going to be there? So keep your Zoom open tomorrow. Please come back at the same time, 10 o'clock. I really enjoyed this day, and so I'm sure would all of you. Thank you and wish you a great day.
Thank you.
Thank you very much, guys. Have a good day. Bye-bye.
Yeah, bye.